Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen is a very exciting and interesting stock to cover because of its high volatility providing opportunities and the ongoing projects that may fuel the speculations even further. At the same time, it's a company that has a hard time proving to the market that its relevance is for the long term and not just the short term speculation. In this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as my recommendation to hopefully help you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description, as every help is greatly appreciated. Over the past week that just finished, Mullen's stock price went down by 40%. That's right, 40% compared to an already very low stock price. I mean, basically, Mullen is dealing with the gravitational force of a death spiral, especially the market-wide assumption that the sell-off will continue, and that whatever Dave Mitchery will do is not going to help the final outcome. Recently, Mullen issued a letter saying that, oh, you know what, good news, they're going to be able to survive for another 12 months. Because they have enough cash to keep everything going, meaning to keep this husk of a penny stock going. Let's just say that the market wasn't too impressed by this, and for the time being, Mullen will do its possible to remain on the exchange in order to better raise capital for later when, the overall environment for equities improves. With that being said, it doesn't really mean that Mullen has enough positive outlook and prospects to keep the positive vibes back, let alone going, if any at all. So with all that being said, my current assessment is that Mullen is a company that is, viewed with mockery by many, and most people do not see this company toughing through the current storm. So, with all that being said, I do believe that Mullen is a company that has volatility as one of its selling point, and by the looks of it, the only selling point. So, let's also go through the technicals. The trading volume of Mullen was recently around 150 million shares versus the average volume of 141 million shares. Over the previous 52-week period, the price fluctuated between 16 cents and $38.00. The volume of shares traded tells us how many shares are being bought and sold at any given point, and also tells us to a certain degree about the interest that this company can generate in the market, if there's enough liquidity to support a strategy, and so on. So if the float is very thin, it would be very easy to influence the stock price. But the low liquidity also means that the demand is limited as well. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. So for example, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap of Mullen is currently $29 million, with an enterprise value of around $48 million. Like, in other words, Mullen is currently trading at a large discount, but really, who can blame him, right? Or actually, who can blame us who accept this deep discount? We're not even sure that Mullen is going to be around for that long, beyond like the 12 month that the company assured us, for whatever it's worth, that oh yes, they're going to survive. So, as we compare the current price to the historical price fluctuations, the stock is 9% higher than the 1 month low, 9% higher than the 3 month low, and 9% higher than the 52 weeks low. On the options market, which sometimes gives us a hint on the market sentiment about where the stock price could go next, the implied volatility is currently 461% versus a historical volatility of 190%. The put-call volume ratio is currently 0.21. It is normal for many stocks to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is 13,000 contracts a day, with a 30-day average of 37,000. In terms of open interest, the most recent volume of open interest is 1 million contracts versus the 30-day average of 1 million contracts as well. In terms of its shareholder structure, institutional shareholders own 147% of Mullen, likely as a result of short selling of the outstanding float. The biggest shareholders include Vanguard, BlackRock, and iShares. Usually, it's best to see some institutional participation in Mullen, but in this case, I just believe that Mullen, regardless of how many institutional shareholders own it, is mostly for short-term volatility plays, which sometimes can give you a lot of gains, but other times, like probably now, have many people holding the bag if you don't watch out after the exposure. The current short interest is 17% of the total float and 60% of the transactions coming out from the dark pools. Typically, if the short interest is above 15% of the total volume and a significant portion of the short volume coming out from the dark pools, this can suggest that there are many institutional positions taken to short the stock. And currently, they may not even be institutional positions. Many people would believe that Mullen has a very good case for keep selling its shares because the difference between its current price and zero can still yield some people, and this is in their opinions, of course, money that they can make for sure. Mullen Automotive is a publicly traded company operating in the EV sector, listed on a NASDAQ. The company designs, manufactures, and sells a range of vehicles, including cars, buses, and trucks. One of the key factors why Mullen is set apart from other EV companies is its focus on long-range electric vehicles. M150, a long-range electric truck, can travel up to 500 miles in a single charge, significantly longer than the range of most other electric vehicles currently on the market, which makes it an attractive company to sometimes invest into. Another key differentiator for Mullen is the focus on developing heavy-duty electric vehicles. The company's product line includes electric buses and trucks, which are designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. The company invests in battery technology as well. They have a proprietary battery management system, supposedly allowing vehicles to have a longer range and faster charging time. Then again, I understand that everybody says that. We would have to see whether time proves that this technology is valid and significant for its share price. This technology can be a key selling point for the company because it allows the vehicles to be more attractive to potential clients. Regarding the financial performance, the company has been having a hard time generating income since they don't have any significant revenue streams before the distribution contract in Europe for iGo vehicles. Those vehicles should generate some income and to be reflected in the 2023 financial reports. In terms of long-term price actions, despite the recent upward momentums, the company has been having, I would say, a relatively bearish trend over the past 5 years, trading between $5 to $10 for a long period of time, before peaking around $15 and finally falling to below $1. What this tells us is that Mullen has been hard hit by the ongoing market trends and that its fundamental weaknesses don't help. This assessment has recently begun to change, but in my opinion, hasn't reached a convincing turning point yet. And that right now, this still explains why Mullen is a stock that I would recommend to trade more than to invest in, regardless of the recent good news or whatever they have. The interest surrounding Mullen is mainly the expectation to scalp a quick gain in a matter of days or weeks, either from the short squeeze or from some significant fundamental announcements, not necessarily waiting for dividends from the car sales. With that being said, I also want to add that things can always change rapidly in the sector, so we shouldn't rule this out either. The online communities have been initially skeptical towards Mullen regarding its capacity to survive beyond the medium term, and if there is no more EV hype to fuel the stock price and to provide liquidity. The general mood has since then transformed into a high speaker of whatever the company announces and enhancing it, with sometimes a pinch of optimism in the air, like asking themselves whether Mullen is the next Tesla or if Mitri is the next Musk. Some also express their worries about the company's lack of transparency, and in my opinion, this is a key weakness of Mullen. They don't like saying much about their suppliers, partners, and clients. Sometimes it's because they're less than clean. Other times, it might be because they're not used of giving full transparency. Recently, multiple announcements that the CEO gave to the investors rekindled some optimism, but I believe that more needs to be done in order for this to become an actual tendency. Basically, as far as their online footprint is concerned, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent a signal to the market which reacts accordingly. On top of that, the macroeconomic trends within the sector have been under huge pressure due to the reasons like interest rates, capital flight, conflicts around the world, supply chain issues, and a general decrease in demand in the years to come, which is likely to occur in key markets. Another factor to look at is how the flagship company is doing. In other words, Tesla. The EV sector is a relatively new industry with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla is performing strongly. The idea is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of companies like NIO, Lucid, or Mullen following a very similar trend to Tesla. Of course, it doesn't always follow the same trends as the other ones. This can play in its favors or the other way around. With that being said, let's also take a look at Mullen's financials, which can give us some hint about what we should do about this company. The cash balance has been decreasing over time. This is not a new issue, but it's definitely a worrisome one. Because the reason why cash balance is relevant is that it is used not only to finance the operations, but also to meet short-term obligations. If Mullen cannot meet those obligations, the company would be liquidated, with the possibility that none of our investments would be reimbursed whatsoever. The liabilities of Mullen tells us that they are trying to control things. They're trying to show that, they're responsible, they're good stewards of our money. But honestly, I don't think that fundamentals are that important for Mullen in the current stage to begin with. The other thing is, as far as the retail traders are concerned, the financial books is not the first place they would begin to examine companies. The last element to look is the profitability. So we should expect to see something coming out of the IGO distribution contracts when they issue Q4 of 2022 and Q1 of 2023. On the other hand, I do believe that Mullen needs to demonstrate to investors that they can sell their own cars. If that's not the case, it's only a matter of time before time runs out. Overall, the financials of Mullen shows us that the company wants to stay afloat. It is willing and sometimes capable of controlling its costs. But what we need to see is the company's capacity to increase its operational revenue. And hopefully, we can see that with the IGO distributions. So, regarding the short squeeze potentials, this is a major catalyst for the company. The reason why it is relevant is because the short positions will tell us about what a significant portion of the market thinks about Mullen, and also whether there will be potentials for a squeeze. Currently, there are around 42.5 million shares been shorted against Mullen, the vast majority of them traded outside of public exchanges, therefore by institutional traders. The potentials for a short squeeze is therefore significant. The short squeeze is a phenomenon observed when traders decide to collectively back up the price of a stock, forcing those holding the short positions to redeem. It's important to note that the short interest is not a guarantee of a short squeeze, but still a metric monitoring by the investors. The redemption acts as a purchase in the open market, which will push the stock price to higher levels. And personally, I think it's worth considering that the short sellers may have valid reasons for their bearish sentiment. There obviously is. Mullen is not one of those well-managed companies or with a very clean history. With that being said, I do believe that this can be one of the key reasons why people want to buy Mullen, including ourselves. My recommendation overall is to stand on the side for Mullen and to see if there are any contrarian movements appearing over the next few weeks. Those kinds of movements are possible, but also very difficult to pinpoint when and especially why they may happen. I mean, after all, we gotta keep in mind that Mullen is mostly a short-term trading position, and it shouldn't be considered as a long-term investment. I would recommend to commit between 0.5 to 1% of your portfolio in Mullen, and would also recommend to split the allocation in batches of 10 to 20% at a time so that you can purchase more in retracements.